It's December 15th, and this is the video log that takes 30,000 to a million. After I take you through the account, I'm going to talk about SPG Simon Property Group and take you through some of the ins and outs and why I kind of missed an opportunity there, but my plans for the future and what I'm looking for. Alright, so here we go. Going into the account here, I see that I'm sitting at $137,000 and $700, which is a little bit less than last time, by about $300, but basically in the same ballpark. I will be listing the positions here on the right, and you can see, starting with the options, that this contains all the information you might need, including the ticker, the strike price, whether it's a put or a call, expiration date, how many contracts I have, and whether it's a sell or a buy. The number on the right just represents the daily change in liability. If you're confused by the options plays, don't worry about it. I do options here a lot, so most of you, if you're subscribed to the channel, you know that I do a lot of option selling, which is kind of my bread and butter, the main way that I make money in the markets. But if you want, you can pause the video at any moment and look at all this information if you're really curious of the exact composition of my account. Here are the equity positions. Apple had fairly neutral day, and everything else was a bit mixed. Uranium continues to be up on a tear, especially energy fuels. I guess that regulation really helped out, but I don't know how sustainable that is. Let's resume. After energy fuels, we have URG, and chemicals was about flat. DEM is a position that I'm kind of crying over because I really wanted to keep all of my shares. However, I had sold a call against these shares way back when, many months ago, maybe 5-6 months ago, not expecting it to exceed the $40 level, but nonetheless, it decided to play that joke for me. So what I'm thinking of doing here is, after my 200 shares and 210 shares become 110, I will just sell another put at around the $40 level, so I can try to regain some of my shares. I do think that a lot of this upswing is a bit temporary. The Russell all the value stocks, the Russell 2000, the emerging markets, value stocks, and this dividend fund over here experienced quite a drastic rise in the last month or so, which is very impressive. I do not expect it to go up that far that quick. I expect corrections in bear markets to be quick and swift, but not an uprise like this. It looks like the inverse of the drop. Almost, you could say it's like a W recovery. But I remember people in March, April, and May were fighting over what kind of letter, the recovery would represent. Well, it looks like it's a bit of a W or a U. All right. So that's the plan here. I really want to get this dividend fund because if you look at the combined PE ratio, it's only 8.55. And the dividend yield is 4.5%. It's very attractive to me. I really like this kind of stuff, and it's comprised of many stocks, so the fund is not going to just go bankrupt all of a sudden. Moving on, I have a very speculative position in Fisker, by the way, that I'm starting to build out. It's only $300 or so. And then I'm starting to build my short S&P 500 fund because we're kind of nearing a little bit of a topping, I think, at least in the short term. And then Schlumberger, I ended up not selling out of my 100 shares through the call option because the stock fell a little bit, as you can see right here down here, so I ended up keeping it. And so subsequently I have sold a $25 call for $40 some, $46. So I'm pretty happy with that movement. And here is the Fisker position. Pretty speculative. I don't know. I have no idea about the valuation. I just thought maybe I should hold some potentially, growing stock in a growing industry. But I don't know. I might sell it. We'll see if I need the money. But this is the account tab, and I already have $7,500 cash, so it keeps rising every week. I noted last time I had 5,000, before that I had a few hundred, before that I was in the negatives. I had a negative cash position, so I've reduced my margin to 0, and now I'm accumulating cash in hopes that there will be a downturn, especially for stock like SPG Simon Property Group, which I want to talk about. So these are all my positions arranged by total return, and this is them arranged by equity. So my four biggest positions at the moment: Apple, emerging market bond, and then realty income, and then the emerging market dividend fund, DEM, which is going away. And energy fuels is also completely going away because its price seems to be stubbornly above $3. So if it sustains that price level through April, I will no longer be owning energy fuels. However, I will have collected some profits from it and a lot of premium, so I'm not that sad about it. Same thing goes for Cameco. I will be completely out of Cameco, which is a company that I've been trading for a long time. I've collected so many dividends from it that it's really paid off. I haven't calculated exactly how much money I made from dividends from Cameco, but it's quite substantial sum over the last 3 years or so. Well, I've been running this account for maybe 2.5 years, but I've been selling options against Cameco for a long time now. And I'm betting that this upturn here looks exactly like this one, January 6th. So there will be a mild correction. Even if the trend continues higher, I do believe that it will drop back down to the $10 level, at which point you'll be sure as hell that I'll be selling puts against that. So don't worry about it. I will regain my Cameco position at some point. There's just not now. That's it with the account review. And now I'm going to be talking about Simon Property Group. So it's a position that really eluded me. I wanted to get quite a few shares of it. However, it never dropped down to the level that I wanted. I sold a $60 put, $65 puts, and I collected hundreds of dollars, many hundreds of dollars. In fact, why don't I just let you know? Let me go to SPG here and show you. Robinhood should be kind enough. Oops, that's DPG, not SPG. I know how to type. And I'll show you exactly how much money I got. So I still have one put, a $55 put, you can see. But I started it a lot higher than $1. Down here, we'll click on show more. So all of these puts, none of them executed. So that's $200 there, 230 here, 200 here, 125 here, 230 here, and 166 down here where you can't see. So that's over $1,000, I believe. Let me roughly calculate it. That's 600, well, almost $1,000, let's say. Not quite 1,000, but almost $1,000 I've gained from selling puts against Simon Property Group, and I just didn't get a chance to enter the company, unfortunately. I said the put's too low and I expected a more meaningful correction, and this is what I pay for it. It says 4,500 employees here, but on FinViz I think it said 3,000. We're going to find out in a minute. The stats here look a tiny bit different than on FinViz. I think Robinhood's metrics are a little bit off. This one says 7.74 with 4,500 employees, whereas FinViz, I think, sports different metrics. Let's take a look. 5.96 dividend % with 3,000 employees. So who knows what the real figures are. But this is the FinViz. What is going on here? Why is this video on full display? Weird. Anyway, the margins are incredible. Definitely looks like a REIT. And the payout is only 154%. So their dividend isn't hurting them that much at the moment, but I do expect them to probably decrease dividend if things go south this winter. Maybe they won't, but they'll just be accumulating too much debt, I think. So I'm fairly happy with the P the way it is right now, because I do think the value of corporate, real estate that's not a home, not non-residential real estate. I forget what it's even called right now. Commercial real estate. Oh my goodness. You can tell it's late. It's 12:38 right now. So the company is just a little bit too big. It's a little out of my range right now. You can see that during the last month, it just had a meteoric rise. I mean, it had a huge repricing here on November 6th to 9th. And I just never got a chance to get back in. I should have tried to sell some more put options down here when it dropped to 68, but I missed the chance, and now I've completely missed the chance. However, there is good news, is that if you were a chartist and you draw a line down here in this descending triangle, I mean, I'm not really one to do any kind of, charting, technical analysis, but there is such thing as trend lines and supports and resistances, if not for any other reason, the psychological one. So I do think that we might be retesting some of these long-term bottoms and highs, and this breakout we will get a chance to try to do something again. And this time I think I'm going to sell puts that are a bit closer to the resistance level there. I think maybe around 65. Let's see what this level is here. It's 81, so I'll probably be selling puts around the 60 to 70 dollar level to try to get into this company, because I really like it long term. I think that it has a really good chance because of the quality of its properties and the way they've handled this huge downturn in real estate. I think it's fairly impressive, considering they're mostly in the mall business, and malls have gotten hit super hard. There's barely anybody in the malls. I had to go in there in the Apple store to check out some, a present that I bought, and they had this huge ordeal in line, and the malls were just basically empty. No one had gone there. It was about, 50 people in the entire mall, and it was one of the most popular ones in the area. And I've only been there once, ever since the initial restrictions came to be when it comes to the movement of people around indoor places in California here. So it's a pretty interesting ordeal, but I am an optimist, and now, especially with the vaccines rolling out, I think that things should be back to normal in 3 to 6 months, but I think the psychological effect will linger, and there'll be a slow recovery when it comes to indoor activity and restaurant usage and all that stuff for the next couple of years, because it will take a little bit for people to forget the hardships that are being endured right now. And as I speak, there's a new stay-at-home order here in California where everybody is instructed not to go out. Restaurants are closed once again and only open for takeout. We used to have outdoor seating available, but now they closed that down as well. And also other indoor institutions and playgrounds are closed and everything else like that. So we'll see what pans out. I think it'll be another 2 years, but it is a very nice long-term investment, I think, with the fat dividend, and definitely potential for commercial real estate to grow. And these malls, I do think, will be repopulated in time. Maybe not to the capacity that they once were, but certainly until this play proves to be profitable once again. So I think I'm going to end it right there. Hopefully you got some insight, but if you do have some insight that I don't, which shouldn't be too hard to do, please let me know in the comments and tell me your findings and what you think about the company or perhaps other real estate plays. I do have some realty income, and I do have some Main Street Capital, and I was looking into Stag, but perhaps not in yet. I do like those monthly dividend, even though it doesn't matter. It's just a quarterly dividend divided by 3. I know that, but it's still cool. And if they seem like in good health, I might sell some puts there as well, because I do have the cash now. I've been accumulating and just waiting for a bit of a correction to start placing positions in. All right, I'm gonna leave it right there. Hopefully you are making more money than I am. Certainly have had an okay month, but judging by the Russell 2000, many of you have probably had even a better week or month. So I'll leave it at that. All right, peace out.